There's a rental strategy quietly outperforming traditional real estate models in cities across the country, and most investors aren't even looking at it. It's called co-living, and it's where real estate, affordability, and lifestyle intersect. In this strategy, you don't rent the home, you rent the rooms. And if done right, it can dramatically boost your income per property while solving a major housing problem for renters. Let's dig into how co-living works, how to set it up, what numbers to expect, and who this is best for. Because if you're serious about creating scalable cash flow, this might be the most underutilized model available to residential investors. Co-living isn't just a niche, it's a solution. Let's start with the big picture. Traditional single-family rentals are straightforward. You buy a 3-bed, 2-bath home, you rent it to a family or couple. They pay one rent check per month. You manage one relationship. Simple? Yes. Profitable? Sometimes. But what if you could take that same 3-bed home and generate income from 3 individuals, each renting a private bedroom and sharing the common areas? Instead of $2,000 per month in total rent, you're collecting $850 per room. That's $2,550, a 27.5% increase in gross revenue without buying another property. Now scale that across multiple properties or a 5 or 6-bedroom house, and the returns start compounding fast. The affordability gap created this opportunity. Here's the macroeconomic backdrop. Rent affordability has plummeted. In cities across the U.S., the average tenant is now spending over 30% of their income on rent. For young professionals, new graduates, remote workers, and digital nomads, the math often doesn't work on a solo lease. Enter co-living. With co-living, they get lower rent for a private space, furnished common areas, utilities often included, built-in community. You solve a real problem for the tenant and get rewarded with stronger cash flow. The key: design your property for the co-living experience. This is not just stuffing roommates into a house and hoping it works. Successful co-living investing is intentional. Here's what that means. You prioritize homes with multiple bedrooms and bathrooms, ideally 4 beds or more. You furnish the common spaces and possibly the bedrooms. You include utilities like Wi-Fi, water, trash, and electric in the rent. You create leases with individual tenants, not joint leases, to mitigate vacancy risk. You add smart locks or keypad entries for security and privacy. You enforce community standards and clean shared spaces regularly. In short, you turn a house into a shared living ecosystem, and you get paid for curating the experience. Let's talk numbers. How profitable is co-living? Here's a real-world example from a market like Charlotte, North Carolina. Single-family home, 5 bedrooms, 3 bathrooms. Traditional rent, $2,500. Co-living rent, $850 per room, times 5 rooms equals $4,250. Gross monthly increase, $1,750. Expenses are slightly higher with utilities and turnover, so let's say you net an additional $1,200 per month. That's $14,400 per year in extra cash flow from the same house. And if you financed it using a house hack strategy, living in one room while renting out the others, you'd likely live for free in pocket cash flow. What kind of properties make good co-living assets? Look for homes with 4+ bedrooms, 5 or more ideal, multiple full bathrooms, 2 minimum, split floor plans or finished basements, common areas that can be furnished easily, zoning that allows unrelated individuals to live together, walkability or proximity to public transit, colleges, hospitals, or employment hubs. You don't need luxury, but you do need function and flexibility. Tenant turnover and screening is the new skill set. This isn't passive investing. You'll have 4 to 6 leases instead of 1. More tenants, more turnover, more logistics, but also more upside. You'll need systems for background and credit screening, furnishing and photographing rooms, advertising on platforms like Roomies, Facebook Marketplace, or PadSplit, automated lease signing, payments, and communication, periodic cleanings or property management. If you're willing to treat this like a business, the returns are worth it. Is co-living legal? That depends on local laws. Some cities have restrictions on how many unrelated individuals can share a house, often called family occupancy limits. You need to check local zoning codes, HOA restrictions, state landlord-tenant laws. In many places, renting to 3 to 5 unrelated people is perfectly legal. but you'll want to consult with a real estate attorney in your area before scaling. What's the difference between co-living and short-term rentals? Great question. Co-living is typically month-to-month or long-term room rentals, usually 6 to 12-month leases. Short-term rentals, STRs, are under 30 days. Think Airbnb. Co-living offers fewer regulations, lower turnover than STRs, less cleaning and furnishing needs, stable monthly cash flow. It's the in-between model that gives you better cash flow than traditional rentals, without the regulatory headaches of Airbnb. Can you combine house hacking with co-living? Absolutely. In fact, this is one of the most powerful strategies for first-time investors. You buy a home with 3.5% down using FHA or 5% down with Fannie Mae. You live in one room. You rent out the others. You collect enough rent to cover the mortgage or even cash flow. And you gain experience managing a property, exposure to tenant screening and operations, the ability to rinse and repeat every 12 to 24 months. It's an on-ramp to building your portfolio with lower risk and higher learning. What about furnishings and utilities? You should furnish living room, couch, chairs, table, TV, dining area, table and chairs, kitchen, basic cookware and utensils, bedrooms. Optional, but you can charge more for furnished rooms. You'll also want to include high-speed Wi-Fi, electricity, water, trash, monthly cleaning service for common areas. This makes your rooms more attractive, minimizes complaints, and lets you charge a premium. How to advertise and fill your co-living property fast. Best platforms, Roomies.com, Facebook Marketplace, Craigslist with caution, Zumper, Zillow Rentals, or Apartments.com. Bumble BFF or local Facebook groups for remote workers and digital nomads. Use clear photos, room dimensions, amenities, and a strong description. Highlight included utilities, furnishings, Wi-Fi, private or shared bathroom information, lease terms, proximity to jobs or schools. It's not uncommon to lease rooms in 24 to 72 hours with the right setup. How do taxes, depreciation, and bookkeeping work? You can depreciate the full home, just like traditional rentals. Expenses that are shared between tenants can be deducted proportionally. Utilities, cleaning, furniture. You'll need good bookkeeping. Use tools like Stessa, Landlord Studio, QuickBooks Self-Employed. Keep all receipts and document your leases for every tenant. This is a real business. Could treat it like one. What are the risks and downsides? Vacancy risk. One room empty hits your margins. Personality clashes. Roommates sometimes don't get along. Higher maintenance. Shared spaces can wear faster. City restrictions. Zoning issues can cause problems. That said, all of these can be mitigated with proper systems, screening, and property selection. Who is co-living real estate best for? Young or new investors looking for strong returns. Investors in high-cost or supply-constrained cities. People house hacking their first or second property. Landlords looking to boost cash flow on an existing asset. It's not ideal for investors who want low-touch, fully passive rentals, unless you hire management. So what's the playbook to get started? Research your market. Make sure zoning allows co-living. Pick the right property, more bedrooms, multiple bathrooms. Design the home for shared living. Market each room effectively. Create systems for tenant screening and payment collection. Track your income and expenses like a business. Reinvest profits into your next co-living asset. Closing thoughts. Co-living is more than a rental strategy. It's a scalable business model for cash flow hungry investors. In a world where affordability is shrinking and traditional rentals are becoming margin thin, co-living offers a bold, practical alternative. You create housing that people need. You earn higher returns for solving real problems. And you build a real estate business with flexibility, scalability, and resilience. This is the model smart investors are using to get ahead in 2025. Tap that subscribe button if you want more breakdowns like this one. Drop a comment if you're already renting by the room or want help setting up your first co-living property. Let's build smarter. Let's invest better. Let's create cash flow with purpose.